If 95 or 97% of traders lose money in the market, then if I could just take the opposite side of them all the time, then I would make money, right? Simple. In this game, that's really not what you want to do. What you want to do is make money. Be right or wrong. That's another thing I say a lot is be wrong, make money. Who cares? I was totally wrong about that. But you know what? I made money. And eventually you get to the point where you're like, okay, this is stupid. It's great that I made 200%, last year, but then I lost 90% this year. So I'm getting nowhere. So this is important, I think. And it's important for anyone who trades anything or any process, I believe, right? Which is that, okay, here's the theory, but when do I put the trade on? And the answer for me is the retail trader over time has a tendency to kill himself. So I don't think he needs AI to do that. I mean, you're talking about less than 5% of traders really make money over time, right? So I don't know that they need AI to kill them because they have always historically killed themselves, right? It's a very, very interesting place we're in right now. One that I don't think, quite frankly, I've ever seen before.
In this podcast, we had the pleasure of speaking with Jason Shapiro, who is a hedge fund manager with over 30 years of experience in the markets. Jason was also featured in Jack Schwager's Unknown Market Wizards, which is an absolute must-read for all traders. In this episode, Jason talks about his contrarian approach to trading. He shares his processes and also his fascinating story on how he turned his trading around and became profitable after a lot of struggles and setbacks. Jason also shared a lot of honest and realistic tips from his 30 years of experience in the markets. And we also talk about the current state of the market, AI, the future of trading, and whether or not we are in a bubble and what this means for traders. So, hello, Jason, and thank you so much for taking the time today. We are super excited to get to talk to you and pick your brain on a few things that we're very curious about.
Okay, good to be here.
Right. Let's get right into it, as always. Just for some context for the audience who doesn't know, how would you describe your trading approach these days?
Most people call it contrarian, which implies counter trend, which most of the time it is, but not all of the time. I'm not being contrarian, sort of price. Yes, I'm being contrarian participation. So when people are like way too short, I'm looking to get long. When people are way too long, I'm looking to get short. That happens a lot at market turns, but sometimes it happens at other places as well.
Right. And you use, I heard you say you don't use technical analysis, so your approach is based on the COT and you trade futures, right? Is that?
Yes.
How did you arrive at this approach? Were you always drawn to counter trend, or is that something that developed over the years as you gain more experience, or how did that come to be?
There came a time where I reached a point where I really had to figure out what I was going to concentrate on. And I had always kept journals of my trading. So I went back through my journals and tried to separate out the trades that were making money over time versus the ones that maybe made money sometimes, but over time lost money, you know. And obviously the ones that weren't making money over time, I got rid of, and the ones that were ended up sort of becoming this process as to what I do. These seem to be the best risk reward trades over any long amount of time that I do. So I just stuck with those.
Right. When you look at your journal, I assume because even when we started 10 years ago, it was pretty much Excel or you have a written diary. How did you keep track of those trades?
Yeah, I had a notebook, written
Right.
diary.
And
That's
what did you look for in your winners? You look for something specific on the technical side, or how they were setting up, or what was it that you were looking for? What you saw, what your winners had in common?
What I found was that the things that made me the most money over time, and this is why I think the journaling part was important, because you wouldn't really pick up on this necessarily unless you went back and really did a thorough kind of analysis of your trading. But it was actually trades that made me money less than 50% of the time. but made me a lot of money when they worked and only lost me a little bit of money when they didn't work, were the best overtime trades for me. So that's hard to get, you know, when you're first starting out or whatever, because who wants to have more losers than winners? Most people don't. But if I can get paid, $5 on my winners and lose $1 on my losers, then, I can afford to be right less than 50% of the time. Whereas the high winning percent trades were the exact opposite. I'd make a small amount, and then lose a big amount, right? So it was a big adjustment to switch to the idea of let's just do what makes the most money over time, which may be trades that are less than 50% winners.
Yeah, that's the
Okay.
hardest part. What we see is that just dealing with all the constant losses. Did you find it hard back then?
I still find it hard. Losing money is never enjoyable.
Right, but yeah, but now at this point you do have the data to back it up. When traders come into this new and they don't know how to deal with this uncertainty and the probabilistic nature of the game. How do you think traders can improve on that part, or how can they get over this very difficult hurdle?
It's hard because, especially nowadays, you know, if you listen to a lot of the verified most successful traders out there, Stanley Druckenmiller, people like that, right? They all say this, right? They will all tell you the same thing, right? It's a small amount of trades that make them the vast majority of their money, and most of their traders are. Stanley Druckenmiller says it all the time, right? The majority of its trades are losers, are losing trades, but the ones that he makes big, and that's how he makes his money over time. That's what Stanley Druckenmiller will tell you. Guys had a pretty decent run. Um, Whereas now you are pummeled with people on the internet and on, YouTube and on wherever you're going for your social media who are selling, and they'll tell you, oh, I have 90% winning trades because that's what people want to hear in order to sign up for their service. Nobody wants to hear, hey, I make money 30% of the time. Well, okay. Then why am I talking to you, right?
Right.
Why would I pay for that, right? Um, I'd rather pay for someone who's telling me they're making money 90% of the time. But the problem is, first of all, it's a lie. um, because these services are not audited in any way whatsoever. There's nobody to audit them. So they can make up whatever they want. They can lie about whatever they want, and eventually the people who have subscribed to their service will figure it out, but by that point it's too late and you're on to the next bunch of suckers. And we uncover these people all the time on our Discord. We have people that have been on these other services and follow some of these other services and expose that, but you can't expose it fast enough. So the problem is that it's much easier to gravitate towards that idea. So how do you get over that? Well, the first way you get over is you start losing money. It's one thing about this game. It's pretty self-correcting. Um, because you've got money involved, right? And you have, just like anybody, you have limited amounts of money involved because you don't have unlimited money, right? So the first way you learn is I think you lose money. The first way you can learn is to believe, you know, and be able to cynically look at who's saying certain things and who's saying other things. And you would gravitate towards obviously Stanley Druckenmiller or people like that. But the truth is you won't, because especially if you're younger, younger people, this is not a rip on younger people. I was the same exact way when I was younger, right? They always think they know better, right? They always think they can do better than the older generation. You're going to hear Stanley Druckenmiller talk and say, whatever, he's averaged 28% a year or something like that for his whole career. And you're going to say, oh, okay, boomer, right? Because I've got my guru over here who's making 200% a year. So why would I listen to you at 28% a year when I could listen to this guy who's making 200% a year, right?
Mm.
And I think that's natural, it's few and far between the people that are going to be young because obviously if you don't have the experience in trading or anything else in life, right? As you get older, I find that you go through things and you start to be able to recognize what's sort of real and not real, because you get scammed or whatever. It's just like anything else, experience teaches, right? But it's very rare the person that's young, I certainly didn't do it, and takes the good advice, obviously. So there's that way about it, and if you can do that, congratulations. But I think that's almost zero amount of the people out there. So the only other way is lose money. That's how it happened to me, you know. Um,
Hmm.
I had periods where I had great runs when I was younger, and I always gave them all back, right? And eventually you get to the point where you're like, okay, this is stupid. It's great that I made 200%, last year, but then I lost 90% this year. So I'm getting nowhere, right? You do that 4 or 5 times, and eventually time goes on and you're older and you don't have any more money. And you're like, okay, well, I'm wasting my time here, right? And then you maybe, if you are still serious about this or whatever endeavor you're trying, but we're obviously particularly talking about trading here. If you're still serious about this, then you'll go and you'll try to really figure it out, which is what happened to me. Well, I was 10 years in, when I then went back and tried to decipher, what's really working and what's really not working. I
It
hope that
took
there are
you.
people smarter than I am that can do that before 10 years. Um, but, it's up to the individual.
Mm. So it took you 10 years to get out of the boom and bust cycle, basically.
It did, yes.
Wow. I mean, most people would probably give up after such a long time. What made you stick with trading?
Well, at that point, I didn't really have a choice.
Okay.
At that point, I was, 30 whatever years old, 31, 32 years old, right? And what was I going to do? You
Mm.
know, um, I couldn't really find any good jobs, because I wasn't really a great employee. Um, so I really didn't have very much of a choice. I had to try and figure out how I was going to do this. I
All
had
right.
tried to get jobs, and whatnot, and I wasn't really having very much success. So I had to figure out how to try and do this. I thought that I could figure it out. I believed that I could hopefully figure out something. But it took a lot of work,
Hmm. At
just
that
like it should,
time,
right? Just like anything should. So
yes, yes. At that time, when you were 31, 32, did you already have like responsibilities, like a family, or were you just by your own?
no, it's funny you asked that because it was like the last time that I ended up blowing out again was right after I had gotten married and my wife at the time was pregnant.
Oh.
So yeah, there comes a time where you're like, I got to stop fooling around. When you're single,
Mm.
especially like for a guy, I think, you're single. Who cares, right? You live in a tent, right, on a beach, and eat
True.
rice. It's easy, right? But when you start
Yeah.
to take on these other responsibilities, then it becomes a whole different game, right?
Mm.
So that was probably part of it as well, as to why I was like, okay, enough's enough. I got to get serious here.
Cool. I feel that because I just had a son. So.
Oh, congratulations.
What I find really interesting is when we look at when users send in their journals and they ask us, hey, look at the data, what we see so much is this obsession about win rate, but what really matters is what we see in the data is the reward to risk ratio. So and that's also something that is much easier to work on what we find when we take a look at the data. Is the reward to risk ratio for you important, and do you try to optimize that, or how do you go about it,
I
especially when
think
you
that's
don't use
I think that's
technical?
all that's important. Win rate is almost irrelevant. Reward to risk ratio is all that's important. Yeah, and I started out by by doing some back testing and trying to, figure it out that way. Um, and then obviously I've been trading like the process that I trade. I started trading in 2000, so I now have like 25 years worth of actual data where I can run those numbers. So, but it started out with, yeah, just here's the process as I see it, so let's try and code that up a little bit and let's try and run a back test and see how that's doing. Understanding, of course, that the back test is going to probably be better than reality, but at least there's something there.
Hmm. And how process driven versus how discretionary would you say are you as a trader?
I'm pretty process driven. Um, I can do whatever I want to do, so I can be discretionary if I so choose. I find that almost every time that I make a discretionary decision, it costs me money. So I try to follow my process as closely as possible. In fairness, there is some discretionary read to some of the inputs in my process, but I try to make it as processed and systemized as I possibly can.
Okay, so you said risk reward is everything. So when before you get into a trade, do you already know where you're gonna get out, or how do you manage your trades?
I don't know where I'm going to get out. I know where
Okay.
I'm going to get stopped, you
Yeah.
know. Um, so given that I know my entry and I know my stop and I know how much I want to risk per trade, I know what size to put on, right? So here's my entry, here's my stop. I put on this much. If I get stopped, I lose this much. Okay, that's what I am looking to. Well, I'm not looking to lose, but when I lose, that's what I'm looking to lose on the trade. So that's all set in stone. Where I get out, it just comes off my process. I'm buying, let's say, because I'm reading that there's way too many shorts out there. Data is telling me that. So if that's the edge, then when the data is telling me there are no longer too many shorts, then I'm getting out. Sometimes that takes a couple weeks. Sometimes that takes a couple months. Sometimes I've had trades last over a year. Not very many, but sometimes, I've had them last longer. So it's not really up to me. It's up to the data, right? And the data is it's different. It's different almost every time, you know.
Hmm.
I'm currently sitting in a trade that I've been sitting in since April. So May, June, July,
All
August,
right.
September, 5 months,
All right. Which market is that?
S&P.
S&P. Okay. Interesting. And if you are not using charts, or do you look at price charts at all to time your trades, or
To time my trades, no.
okay,
No, I look at
then
charts all day long, I mean, that's how we
yeah,
visualize the market, but I'm not timing my trades based on chart.
okay. And I'm trying to understand your process a bit more. So the COT comes out on a Friday, and
Mhm.
then you make your fundamental bias based on that, or you create your thesis for a trade. Then how do you know when to get in? Do you get in right on a Monday if you have a really good bias, or
No. So this is important, I think, and it's important for anyone who trades anything or any process, I believe, right? Which is that, okay, here's the theory, but when do I put the trade on? And the answer for me is when the market confirms my theory, when the market agrees with my theory, right? So if I'm picking a turn, let's say, market's going down, 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 and okay, now I see that everybody's short, so I'm looking to get long. Well, I'm not just going to buy it if it's still going
mm,
down. And the data that I use is not perfect market timing tool,
hmm,
as is almost no data. I would argue no data is a perfect market timing tool. So I wait for the market to confirm my idea first, right? So what is the definition of confirm? And for everyone, that's going to be a little bit different depending on what their process is. But for me, it's like, and this is where a little bit of the discretionary read comes in, but this market's been going down a lot. and therefore everybody, a vast majority of the people have gotten short. So then what I'm asking myself is, well, why is that? What's driving it? You know, what's the narrative behind it, right? Um, and then I'm looking for something to be released. So now I'm looking at long because they're all short. So I'm looking for something to come out that supports the narrative that has gotten everybody to keep selling, right? So some bearish news comes out, right?
Mm.
And they should sell. And maybe they do, but by the end of the day, the market actually closes positive. And that's what I call news rejection. Some people call it buy the news, buy the rumor, sell the fact type of thing. It's all the
Hmm.
same type of idea, but that's what I'm looking for. So now the market is no longer going down on what people have been selling it on, the news that people have been selling it on. So to me, why is that? Well, to me, it's because everybody's already short, right? Which is what my data is telling me, right? So that's when I put the trade on. I think
Oh, okay.
I think a great example of this. I mean, I could give a lot of them because that's what all my trades look like. But since most people follow the stock market the closest, um, I think a great example was the bottom of the 2022 bear market, right?
Okay.
Where in 2022 the market was selling off. Why? Because the Fed was raising rates, right? Why? Because the inflation numbers were coming out higher every time. That was pretty much the story in 2022. I think we can agree,
Hmm.
right? So in September, or maybe it was October of 2022, we had a CPI come out um, higher than expected, so more bearish than expected. That's what was driving the market down. And in fact, the CPI came out that day. It was the highest CPI number for the entire cycle up to that point. So it was a super bearish number.
Hmm.
Um, but you know what? The market, after gapping down on that, ended up closing up on the day. And that
Hmm.
was the exact low of the stock market since then. We're up, God knows how much since then, right? From 3,600 to 6,700, right?
Yes.
Now, you're not going to get that kind of move every time, right?
Yeah.
But in general, that was the bottom of the stock market. Well, not in general, that was the bottom of the stock market on a
Yeah.
day when the news was straight up as bearish as could be. Exact news that a bear would be looking for. And the market closed up that day, and that was the bottom of the market. So that's what I look for.
Cool. Did you get into that trade?
I didn't because I wasn't set up at that point, but I got in later, somewhere in January. Apparently, people sold into the first rally, so they did get super
Yeah.
short at that point. And then we got another news failure like that in January, and I got in there, which was a little higher than the turn, but than the turn in October. But nevertheless, ended up being a
Pretty
pretty
good
good
trade.
trade. Yeah.
Mm.
Yeah, it's interesting
And
because a lot of people always say news are unreliable and they believe it's random because good news, market goes down, bad news go up, and vice versa, and you never know what's going to happen. But is it a case of just missing the bigger context and understanding what else is going on? They just look at a single data point. What's your opinion here?
No, I think that's correct. News is random. Good news comes out, the market goes up. Bad news comes out, the market goes down. Okay. How are you going to get in front of that? You don't know the news, right? So how are you going to get in front of that? So that offers to me no interest and no edge, right? So why do it? Um, but good news comes out and the market doesn't go up, right? Or bad news comes out and the market doesn't go down. Now you're talking about something, right? That's a tell, right? Why isn't the market going down on this bad news, right? And the answer could again be randomness. It's oversold, whatever, right? Could always
Mhm.
be that as well. But again, I'm just playing odds. If everybody is super short and the market can't go down on this bad news, well, then that's a risk reward opportunity that I want to take. And if it's
Mhm.
wrong, I mean, look, I'm picking a turn. If it goes through the new low, well, then it's not a turn, so I'm out. Okay, I take my loss. I don't like it, but it's part of the game.
Do you use various position or dynamic position sizing based on the conviction that you have in an idea, or you always use 0.25% or something like that?
Yeah, I always use the same size from entry to stop.
Okay. And when you get into a trade, like for example the S&P 4 in April, then you wait for a different COT reading that then tells you, okay, this is the time to get out then.
That's right. I mean, like I say,
Mm,
I think this is important for people in the process. Why are you getting in?
mm,
Okay. You have to be able to define that, right? Well, then when that doesn't exist anymore, then why would you still be in, right? So I'm getting in because people are way too short, okay? According to the data that I look at. Well, once that no longer exists, well, then my edge is gone. Doesn't
mm,
mean the market can't keep going the way that I was in or whatever. It can. The market's either going to go up or down, obviously. But my edge is gone, so I get out once that edge is gone.
mm, mm. And there was one question I had specifically about the COT. So there are, to the listeners that don't know, there are three parties in the COT. It's the commercials, the non-commercials, and the retailers, basically. Do you pay attention to different of these groups in different markets? For example, are the commercials more important in agriculturals, or the fund managers more important in the indices, or
I
how do you
look
do
at
that?
all three
Yeah.
in all the markets. I'm looking for all of them to be very one-sided for me to get into a trade. The only place that is not the case would be the stock indices, where I really just pay attention to the commercials, which the commercials at the end of the day are going to be equal and opposite to the total of the large and small specs together. So in a way, I'm looking at that as well, but I do just use the commercial number for equities because that's what tested best. So that's what I do.
Okay. And do you look for extremes in the commercial numbers, all-time highs, lows, for example? Yeah. Okay.
Yeah, yeah. It's not necessarily all-time highs or lows because then I would get one trade in a lifetime, right? Um,
Yes.
but I index it, over a
Oh,
back
okay.
test, over a look back period, call it like a year. So I'm looking at the index over the year and okay, this is the most short they've been in a year, that kind of thing.
Ah, okay. Cool.
I have a question about your process. And by the way, everything, because you have a crowded market report, everything will be linked underneath the episode so people can check it out. But I was wondering about your process. Is it something that you have like a physical checklist? I read back in the day Marty Schwartz's book. He said even after 3, 4 decades, he still has a physical checklist. Or is it something you have in your that's just so ingrained that you have your process in your head at these days?
I mean, it's ingrained, it's in my head, but at the same time, like the crowded market report, for example, started out as just distributing what as a weekly newsletter, what it is I do on the weekend, which I've done forever, every weekend for myself, right? Which is I go through all the markets. Is this one set up? Is this set up? And if so, then what am I looking for to actually put the trade on, right? And what am I thinking? And then, and I used to do this for myself as well. I'll throw a bunch of other crap in there too, like macro views and all this, mostly so that I can go back later and be like, look at how wrong I was on this macro view. Thank God I wasn't trading that idea because it would have killed me, right? Um, but I do put like some macro views in, not from the point of view of what I think macro wise based on my education in economics, but more about if the positioning is here and it's implying that markets are going to do this, then what would the macro look like later if the markets were to do this? And what would the world look like if the markets were to do this? What would the macro narrative be at that time? Right? I kind of back into it. I don't say, here's my macro view, so this is what the markets are going to do. I'm like, this is what the markets might do here, and therefore, what would the macro look like? Right?
Mm,
So it ends up being a big contrarian thing. And then I like to compare that to what is sort of the major macro narrative out there now, right? I mean, this is where we make our big trades and we make our big money is when that changes, when narrative goes from here to here and markets have to make that big adjustment, right? That's where we make big trades. Um, so I like to compare, okay, if this is what the macro would look like under this scenario, then how does that compare to the macro now? And is there a big difference, right? And therefore, could there be a big edge here? There's no edge in consensus, right? So
So how do you look at the current situation with the S&P at 6,700? What is your take at the moment? It's super interesting because obviously, well, as always, when there's an all-time high, people are talking about potential crashes. Others say AI is going to drive it to the moon. How do you see that?
it's a very, very interesting place we're in right now. One that I don't think, quite frankly, I've ever seen before. Um, Everybody's talking about a bubble, right? So I don't know how there can be a bubble if everyone's talking about a bubble, right? Um, Especially from my point of view, when I look, I think positioning is such a big driver. They're not super long here. So how can there be a bubble unless everybody's super long? It's, but at the same time, it's pretty easy to make the argument that there is in fact a bubble going on. I mean, you just close your eyes, buy a stock, it goes up, right? That's that's not normal. I
Yes.
always say like I bought a few stocks in the last few months in my like retirement account just because a friend of mine told me like the classic kind of bullcrap, right? And these stocks are up like 30, 40%. Like this is not normal. This is not a normal time, right? That kind of stuff is very bubbly, right?
Mm.
But at the same time with that one, I feel, and you see this stuff on X all the time, all these people talking about how they're making, 200% this year and all that. But I would guess, I don't know what everybody's doing out there, but I would guess it's very similar to what I've done, right? Okay, I bought a few stocks. They went up 30, 40%. But this is 10% of my portfolio. You know what I mean? Like these people
Okay.
that say they're up 200%. Okay, you have a $500,000. You put $30,000 into an account and you're up 200% on that $30,000. But how are you on the whole 500,000, right? That's the real question. Nobody talks about that, right? They only talk about what they're up on their account, but they're not telling us how much they're in cash. I don't know whether they are or they're not. I'm sure everybody's different, but in general, just using myself as the gauge, right? I didn't put all my money into these stocks that went up 30, 40%. I put a very small amount of my money into these stocks. And now I can talk about it. Hey, look how great I am. I bought a stock that's up 40% in 5 weeks. Great. I did it with 1% of my net worth, so who cares, right?
Mm.
And I think that's where a lot of people are. I think that's where a lot of people are. I think for the most part, if people are honest about it and they really look at their overall investments and their overall portfolio, while they might be making money, I think they're still underinvested. That's my guess.
Mm.
So I don't know. It's a very, 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 in particular in the equity market, interesting time, you know, because you can argue, as you said, um, that people are super excited about the AI thing at this point, right? And it's getting a little bit out of control too, right? We're getting all this news every day now, whatever it is. This company's investing $100 billion in this company, and then this company's investing $100 billion in this company, and then this company's taking the $100 billion and buying products from the first company, and it's just like a circle of Ponzi scheme, right? It seems
Yeah.
like, right? So we are getting quite a bit of things like that are bubbly. Um, But the other question is it a bubble or is it just a bull market? And what's the difference? You know? Um, so it's a tough one. I mean, I'm sitting long still until my data tells me to get out. It's been a good trade. I'm not going to argue with it. It's great. I'm sitting here hoping that I don't give it all back, you know, because I don't have an exit. And I could give it all back because the valuations and I mean we all know the story here, right? I mean that's the other bubbly thing that you can argue, right? Is obviously almost any measure of valuation that you look at nowadays is got record highs, right?
Mm.
Um, but again, is that because it should be because it's discounting in the biggest the biggest change the world has ever seen with this AI stuff. And if that's going to be real, then if that's real, we don't know how real it is. We don't know what this looks like in 5 years. We don't know what these companies are making. We don't know how much, this is going to help everybody. But if it does what it's claimed to do, then market should be at all-time high, right? If
Yeah,
productivity is about to have the biggest jump in the history of mankind, like we are told, then valuation should be at all-time highs, you know? So again, it's tough. Which one is it? Which one is it?
I guess
And
it's very similar to the 2000.com bubble. People with this new technology emerging, everybody thought it's gonna change the world. It did, but there was a bubble. So how
that's
different is
true.
it?
But you know something? For example, I lived through the 2000 bubble. Okay. I traded through the 2000 bubble. This was before I was using COT and positioning data. And I was just using my sort of, am I being contrarian here? Right. And I can tell you that the last half of 99, you go out to lunch and the entire restaurant is talking about the stocks that they're buying and how much money they're making. And you go out to have drinks with your friends and everybody is talking about the stocks that they're buying and how much money they're making. And it was the classic shoe shine boy stuff. So I, of course, was shorting that. And the NASDAQ went up from July to January over 50%. Okay. So I was getting run over. Right? Was I right? Okay. Ultimately, I was right, but not before I lost a whole boatload of money, right? Um, so, and I don't see that now. Do we see people talking about the stock market? Of course. Do we see people making money? Yes, but I don't see it like I saw it in 2000 personally. Now, that doesn't mean that it has to be the same exact thing, but what I'm saying is it's not the same exact thing. From that point of view, it's just not. Because if it were, I would have friends and family and everybody calling me up 5 times a day asking me what stock to buy. And I don't have that, right? We have nobody was talking in 99 that this was a bubble. Nobody, right? And now we hear people talk about a bubble every single day, right? So it's different. If we were to go back 5 years from now, if this ended up being the top today, right here, and we looked at it 5 years from now and said, did we see any signs that that could have been the top? I think the answer is clearly yes. There are plenty of signs that would have indicated to us that this could have been the top, right?
Mhm.
But I don't see it as the same as 2000. I don't even see it as close to the same as 2000. And, I also traded in the bubble in Hong Kong in the mid 90s, early to mid 90s. And it was the same thing. I mean, but that's all you heard about. That's all anybody talked about. Stocks, 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 stocks. People weren't even working there. You know what I mean? It was just stocks, 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 stocks. No one cared about work or anything. They just cared about stocks, right? And it was the same thing. It had something to do it where China was opening up and was going from being basically a closed society of a billion and whatever people. And Deng Xiaoping came out and said, to get rich is glorious was his famous line, and the floodgates opened, right? And it opened through Hong Kong because there was no stock market in China at the time, right? And all kinds of wacky things were going on that you couldn't lose money on. So the theory went, where a bunch of these Chinese companies wanted to list on a stock exchange. There was no stock exchange in China, so they were just buying what they were called shell companies in Hong Kong. So some stock that
Mhm.
was trading at 2 cents or whatever, and like all of a sudden the National Oil Company of China would buy that company and inject their assets into it. So it goes from being worth 2 cents a share to being worth, $2,000 a share, right?
Oh,
And
wow.
so we started getting those. So then, of course, you didn't just need the companies to buy that. Everybody just started buying all those shitty companies because they thought they figured at some point, so one of these Chinese companies was going to buy it. So these stocks started going from 2 cents to 20 cents to 80 cents to a dollar, in a couple of weeks, just on the speculation that some Chinese company was going to buy it, right? And you start getting the calls like, oh, my friend, is the manager of the bank and he sees the loan on his desk that, they're going to buy this company, all those rumors start flying around and everybody buys you know what I mean? That's bubble, right? That's bubble. Not everyone's going to be the same, but I just
Mhm.
don't think that this one is the same as those from what I can tell from my experience to this point.
I mean, we we have both traded for 10 plus years now, but we haven't traded through a real bubble yet. So hearing these experiences from you is pretty valuable for us. I mean, I have seen the crypto bubble, but I haven't seen the real stock market bubble yet. So let's see.
Well, maybe you have and you just don't know it. Maybe this is the top of it. I don't know, I don't know.
Yeah.
Like I said, there are certainly some bubbly type of things going on here.
Yes, yes.
But even if it is a bubble, the famous line is that markets can be irrational longer than you can stay solvent, right?
Mm.
Um, Soros says when he sees a bubble, he gets involved, right? Druckenmiller talks about what he did in 2000, which was similar to me in that he saw it as a bubble and he was shorting it and he got run over. And in fact, it didn't top until he threw in the towel and bought everything. And he talks, I don't know the guy, unfortunately, but he talks about how he bought the market within like 2 hours of it being the ultimate high. Right? He finally flipped from short to long, and it was like within 2 hours of being the exact high in the market. And this is one of the greatest
Yikes.
traders alive, right? Um, bubble, if it's a bubble, bubbles tend to top when you absolutely cannot hold a short anymore. Doesn't matter if you think it's a bubble, if you don't think it's a bubble, whatever you think, you can't hold it anymore because you can't afford it. Think of the GameStop thing, right? That
Yeah.
guy that they squeezed, the hedge fund guy that they squeezed. He knew that GME was way overvalued. He knew that it wasn't worth a damn thing. They squeezed it. So what did he do? He went out and convinced some of the smartest minds in the business to lend him some more money so that he could short more, right? Steve Cohen and all that. They lent him another, I don't know, $100 million or something like that, or $1 billion. I don't know. I don't remember the exact number, but so that he could short more because it was absolutely overvalued and ridiculous. And then he
Mm.
got squeezed more. And then he covered because he had to, because he had no more money left. It didn't matter. It didn't matter if he could sit there and prove to you beyond a shadow of a doubt that GME was worth zero. He still had to buy it back at 100 and whatever because he didn't have any more money. That tends to be how a bubble tops, right? When there
Mm.
just is no choice, there is no option to stay short.
Mm.
Tends to be how a bubble tops. So if this is a bubble, that's what you have to ask. Are we there yet?
Mhm.
I don't know that the answer is yes.
Right.
But bubbles, I've been saying this whole year has been my main theme, I think, is bubbles are born out of bull markets, Bubbles don't come out of bear markets. You have a bull market and then you have the bubble, right? So are we in a bull market or are we in a bubble? I don't know.
Mm.
I'm wondering because we see it a lot on social media. There's a lot of talk about AI and the future of retail traders, in particular.
Hmm.
What is your take? Do you think AI is going to replace it? Will the role of retail traders shift? Will there always be a place? What's your take here?
I don't know, Um, I like to say, without sounding like too much of a jerk, I'm too old to worry about it.
Yeah.
Okay.
Because if AI takes it all over and no one can try, I'll retire, so I don't have to worry about it.
Makes
But
sense. Fair enough.
in fairness, is it going to completely take? It's just another thing, you know what I mean? It's just another thing. Algos has been the thing for the last 20 years that was supposed to take human traders out of the whole game, right? If you go back and read the books, from the 20s and all that stuff. Um, they talk about the word's escaping me right now, but there's a word that they always use. The syndicates, that would get together
Oh,
and manipulate a stock or,
the dark
manipulate a
pools
stock.
or
Sorry?
the dark pools, you mean?
They wouldn't call them dark pools, but
Uh,
it was whatever, some groups of big money that would get together and try to manipulate a stock, right? You had those. It's all the same thing, and so now you'll have okay, the AI stuff will do that, but I still think people will be able to find an edge. I mean, is it going to kill the retail trader? The retail trader over time has a tendency to kill himself, so I don't think he needs AI to do that. I mean, you're talking about less than 5% of traders really make money over time, right? So I don't know that they need AI to kill them because they have always historically killed themselves, right? So I think the game will still be going. You just have to be able to find an edge, you know?
Mm. I was playing poker for a long time, and there was always this discussion because there were poker boards that were very game theory optimal, etc. And then the question was always, is the game dying? And of course, the edge got smaller, but a lot of the pros they said, as long as they make idiots, you can still make money off of them. And it might be a bit harsh, but it's
No,
probably true.
I think that that's exactly right.
Yeah.
As long as there are idiots, there's ways to make money by
Yes.
going opposite them. And listen, that's all I am trying to do in the markets is exactly what you just said, right? That's all I'm trying to do. That's what this whole thing is born out of, right? If 95 or 97% of traders lose money in the market, then if I could just take the opposite side of them all the time, then I would make money, right? Simple. Well, how do I take the opposite? How do I figure out what those people are doing? I can't figure out what they're all doing. But if I'm looking at positioning and I'm paying attention to that and it's showing that people are super crowded to one side, then it increases the odds that I am getting on the opposite side of what these people are doing, right? It's really
Mhm.
all I'm doing, you know. We have a phrase that we like to use, don't trade, fade, which basically means stop thinking and stop trying to be smart about all this and just go opposite what all the you're doing and make money. It might not make you feel like a genius. You might not be able to go to a cocktail party and tell everybody how smart you are, that you predicted what the economy was going to do and you predicted what the interest rates were going to do and blah, 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 blah. But what you will be able to do is go to the bar and buy everybody a drink because you'll be making a lot of money over time. So you have to kind of make that choice as to what do you want to do. Are you looking to make money or are you looking to be smart? And that's everybody's choice, and it sounds stupid to say, of course I want to make money. You say that, but I don't know that that's necessarily true. You have to really do a deep dive into your psyche and all this stuff to figure out what it is you're really trying to do. Because people, at the end of the day, want to be right. It's an important part of life. They want to be right. They want to argue. You see it all the time. People arguing and all that they want to be right. In this game, that's really not what you want to do. What you want to do is make money. Be right or wrong. That's another thing I say a lot is be wrong, make money. Who cares? I was totally wrong about that. But you know what? I made money. So who cares if I was wrong? I'm glad to be wrong if I can make money, right? And that's the importance of letting the market tell you rather than you telling the market, what it has to do. Let the market tell you what it actually is doing, I mean, if it were me and I weren't looking at positioning and I was, younger, I would absolutely be calling this a bubble here and I would be shorting the whole way, you know? Um, and what would be happening if I was doing that? I would be losing money. Up to this point, I would be losing money, right? So, be wrong, make money, you know?
In your crowded market report Discord group, you got quite a lot of retailers, and would you say that there are some student successes that you could see? Okay, they really turned it around with the market report because they already had the psychology right, or do you think most people need to work on their psychology first and then they go for the technicals? Would you say that a methodology has to fit your personality, basically?
I think the methodology does have to fit your personality.
Mm,
I don't encourage people that come on Crowd Market Report to just copy trade my trades. I
mm,
do give on there what my trades are. They can, if that's what they want to do, copy trade my trades. I don't think it's a good idea because just like I can't trade what you do, you really can't trade what I do. Personality is not there. The belief system isn't there.
mm,
Um, you didn't develop it, therefore you're not going to have the trust that I have in it because I developed it and I've been trading it for 25 years and I see 25 years of return. So, You don't have that. I could give it to you, but then the first time you lose two trades in a row, you're going to say, "Oh, Shapiro's full of shit. This is a bunch of bullshit." I mean, that's normal. So I do think you need to develop your own methodology, but the lessons across all methodologies are the same. Like I say, wait for the market to confirm what you believe. Doesn't matter what your methodology is, right? That can be used across any methodology and should be used across any methodology, right? Don't fight the tape, you know. Um, the whole idea of risk management and how to deal with your stops and all that. This is true of, just the idea that we talked about before. What gets me out of a trade? Well, the opposite of what gets me in the trade. I'm getting in because of this edge, then I'm getting out when that edge is gone. That works across all methodologies, right?
Hmm.
Um, as for the people that are on the crowded market report, we've had many, many come through. And I see a lot of different things go on. You know, I have found that the people that have had the most success since they've got on here, from what I can tell, are the ones who came for the right reason. And the right reason to me is because they are sick of losing money, right? And they don't want to go back to their old ways, right? We do have some people come on here and have certain ways of doing things, and they continue to do those ways of doing things, and they like to tell everybody what they're doing. Hey, I'm getting long here because of this, or I'm getting short here because of this. Those tend to be the people that have the most trouble, because they probably just haven't lost enough money yet. I always tell the guy who runs Crowded Market Report, I'm like, we should just screen all the people that want to join here. And unless you can prove to us that you've blown out your account at least once, then you shouldn't, then you shouldn't come on here, because you're probably not ready for this type of stuff, right? The ones who seem to be ready are the ones that have lost a bunch of money and still want to do this. I tell people, like, you should just go and join one of those other services that's telling you about their technical analysis and their 90% win rate and all that shit. Go join them first would be the best idea, because you won't want to hear the things that I'm talking about until you've had trouble. And once you've had trouble, then the things that I'm talking about will make a lot more sense to you. So, save your money and my time and go join one of these other services. And then once you blow out or lose a bunch of money and you want to actually, and you decide you want to continue to do this, then come to us and hopefully we can help you.
Very fair answer.
It's
Nice.
kind of how I take it, but
Yeah.
Yeah, it's fascinating. We recently started talking more to our users, and we look at the objective data in how their trading is doing. And sometimes you can very clearly see, hey, this is actually not working at all. Maybe you should stop this. You've done this for the last 100 trades and it's not working. But a lot of people are really resistant to, I don't know, is it accepting a change, or they're just so stubborn that they cannot, even if the data tells them, hey, what you've been doing just loses you money for the last 3-4 years. And it's so hard to get people actually to this place. Yeah, I think it could be.
it's amazing.
Yeah.
It's amazing. And that's why I say, like, are you looking to be right, or are you looking to make money? And everybody's going to be, well, don't be stupid. Of course I'm looking to make money. But my question is that really what you're looking to do? You know? And as we do a lot of study into human psychology, we find that sometimes people's motivations are other than what you would think would be the efficient motivation, right? Some
Mm.
people are looking for sympathy, right? People whose, mommies didn't give them enough attention when they were growing up, or whatever it is, right? Um, are looking for sympathy, right? Are looking to lose, right? I find that with a lot of people, not just that lose in markets, but I've known people that just fail across the board in everything they try to do. But you see why it is. They fail because of themselves, because of their behavior, and they refuse to change that behavior. Why is that? They must be getting something out of it, They're getting some benefit that's filling a hole in their life out of it, you know, whatever that may be. And and these are very deep psychological concepts. Um, but yeah, it's very fascinating. Why would somebody sit there that's losing money for 3-4 years in a row and still continue to do the same thing? They don't want to admit they're wrong. I see that with technical analysis all the time. It's not that technical analysis is bullcrap. It's that I just happen to be reading the charts wrong. Well, maybe, or maybe that it's just what you're doing from the get-go is just a bunch of bullcrap. I don't know. Not saying that that's what it is, but maybe it is, right? You have to be open-minded to think that Everything is bull crap, and that to me is what's so fun and interesting about the markets is you know, it will separate out pretty damn quickly, right? There's no, or there shouldn't be any judgment other than P&L is the answer. If you do, and I say to people all the time, like I'll say technical analysis bullshit, and the guy will be like, "Well, I've been doing nothing but technical analysis and I make money." I'm like, "Okay, well then I'm wrong and you're right. If it works for you, then it's right. If you're making money, then it's right. It doesn't matter what I say. It doesn't matter what anybody says. You know, people tell
Mm.
me all the time that what I do, you know, oh, the COT is this is not great, and the COT is this and not that. I'm like, okay, if you feel that way, then don't use it. But you know, I haven't had a down year in 25 years, so it's working for me. Therefore, for me, it's good. You know what I mean? And I went through this with when I used to raise money from institutions and stuff. I would sit there and 9 times out of 10, they would tell me, oh, well, how did the COT doesn't work? And we've looked at it. And I'm like, okay, you know, fair enough. It doesn't work for you,
Mm.
then okay, then don't give me money. But
Mm.
it's worked for me. So therefore, you know, that's what I do. I mean, if it didn't work for me, I would have to do something else, you know, and I would, you know, I'd have to make some adjustment and whatever, start trading head and shoulders and cup and handles and support and resistance or whatever, you know. Um, so yeah, that's my view on that.
It's
Right.
like that famous quote from Ed Koda, everyone gets from the markets what they want.
I think that's Dakota, and I never met the guy, but I think that
Mm.
that's it's such a genius thing that he says there.
Yeah, yeah,
Everybody gets what you want, and
So deep, yeah.
you think what you want is money, but a lot of times it's not the case.
Yeah.
yeah.
Just have a final question. You sound like you don't let the ego get involved. Is that something that you actively worked on your psychology over the years, or is it just a process of experience and seeing the losses and seeing that the ego, if you get it involved, doesn't really help?
Very difficult, but you know. But very necessary. And yes, it has to be worked on. You know, I consistently, you never see me. I wouldn't say never, but very rarely do you see me, you know, and the people who want to increase the amount of people that join, like the CMR, for example, always want me to get on there and do videos. Look how great this trade was, and we got this trade, and look at how great we are, and look at how smart we are. And I refuse to do it because as soon as you do that, you're dead. That's how I see it, you know? So I very rarely will talk about that. I usually talk about how much I suck. And people are always like, oh, you know, you're so not confident. You lack confidence. I'm like, it has nothing to do with lacking confidence. It's almost like it's almost like a belief system for me, you know? I have to continually think I suck if I want to continue to make money. You know, I don't ever want to get caught in the trap of um of thinking I'm good because that's when you start to lose discipline, you know? Um, so yeah, it's a constant battle. Um, but all these things are a constant battle, and I try to live my entire life, you know, in this way, right? I don't, for example, go out and buy expensive toys for myself, right? Because I feel like as soon as I do that, I'm about to start losing money, you know? I don't live anywhere close to beyond my means because as soon as I do that, I'm probably going to start losing money, right? My whole life is based around this bizarre world, which is why some days I just think I should just retire and cut it out, and then I can just enjoy my life. Um, but um, yeah, no, it's a constant battle,
Mm.
but an important one.
Mm.
Yep. Thank you so much, Jason. This was a really, really insightful conversation. I had a lot of fun. So thank you so much for taking out the time today to talk to us. Again, everything that is Crowded Market Report, your YouTube channel, which is amazing, your Twitter, everything will be linked down below so people can check it out. Thanks so much again for taking the
Cool.
time.
Thank you.
Yep. Thanks for having me. Good talking to you guys.